All right, let's get started. Um, so this class I'm going to be going over kind of again higher time frame analysis, as well as how to like predict weekly outlooks using weekly profile. So, um, for starters, I have a good video you guys should watch. You don't have to watch it now, but it's for future watch this video. It's called. I'll bring it up. All right, so it's using weekly profiles for daily bias. Okay. There's also a PDF in the study section in my Discord. And basically what it says is there's a lot of stats that back up and show that like the high of week or low of week is usually formed like a Monday or Tuesday. So whenever I'm looking for that weekly outlook or whatever it may be, okay, I'm always looking for like where's the best chance we're gonna get like a low of week or high of week, okay, whatever it may be. And I kind of use just PD arrays in the weekly or daily to kind of help me with that. So, um, you're never gonna be right 100% of the time, which is why I kind of create a couple scenarios and I kind of react accordingly. So, um, as I share my screen, okay, you guys are gonna see. This is the video. I'll link this, by the way. So I'll link this.
You can go down below.
Um, so there's a link to the video. Now, whenever I kind of do the weekly outlook or whatever I'm thinking, okay, I always look for the most obvious PD arrays, whether it be an inversion, whether it be an order block, whether it be whatever it may be. Okay, I think order blocks and fair value gaps are the easiest, but sometimes there could be a breaker you could use. Um, like this one, I like this reclaimed order block right here, so good one for me as well. So that's one. And then this, so I kind of draw them out, and I always have two plans. Kind of, I don't have a single plan because when you make a plan or when you have a prediction and it's wrong, usually that's when you take a loss. And I always say you got to react, not predict, right? So, I mean, I would usually come up with a couple of different plans. So, revolving around fair value gaps and lower time frames. So, what do I mean by that? So, for example, this week I have this drawn, but I understand there is a daily and weekly or daily and a weekly fair value gap down here. Okay, so like I'm gonna have this drawn, but I'm also understanding there is stuff down here too. So my two predictions are this. This is my number one prediction. This is what I think's gonna happen. I think we're gonna make a low tomorrow somewhere inside of here, and the body's not gonna close below it, and we're gonna go like this. And my second prediction is we go like this. So it's gonna be bearish week. We go down here, then we bounce out the next week. So those are my two predictions. Well, how do I know which one's gonna play out? Okay, so once you have kind of your two predictions that you can see happening, I'm always gonna. This is always gonna be number one. This is like my number one, but you always have to have a backup plan. You always want to say, okay, I know you should have a condition that kind of says, okay, I know if the first one fails, I know when it's gonna fail. Like I know that we're gonna go to here. Okay, but how do you know that? Well, it's based off a fair value gap. So what I'll do is I'll go to like the 4 hour and I'll look for like a condition that maybe it breaks. I know this one's gonna be wrong. So automatically right here, I see two big 4 hour fair value gaps. Okay, right here and right here. Okay, so I would love a time frame. I would love a time frame as there if there's only a single one. Um, the daily there's not one. Let me check like the 8 hour here. Um, 8 hour. Okay, if we look at the 8 hour, still single one. Let's check the 12 hour maybe. All right, 12 hours, perfect. So the 12 hour has a single fair value gap. So how will I know when this prediction is wrong? Well, I'll know when this prediction is wrong is if this fair value gets violated. So like I'm going into the week with my condition being that this is my condition. Okay, as long as it holds my weekly prediction or something like this, and I know if it breaks, I know what. I know it'll probably go to the next intermediate term low inside the next fair value gap, which is right here. Okay, why here? Because you can see it's a low inside this fair value gap, so at least hit there, and then I'll look for long setup from down there. So when I make my 2 weekly predictions here, okay, this being the number one of my favorite, all right, I'm expecting this. However, I know, and I'll switch short if I see price go down tomorrow and just really just rip through these. So like rip through this with a giant candle, rip through this with a giant candle, and I see like a little market maker sell model forming. Okay, I'll short. Okay, and if I see that and I don't see any long setups tomorrow, that's my sign to short. But as of now, what am I looking at now? Well, I'm looking for some sort of long setup off any of this because that's what I think. But like tomorrow, the candles will tell me. And what happens is usually if I'm right, we will get a long setup and it will at least work to internal liquidity. So a lot of times you'll get a long setup and it should work to that internal liquidity to where at least you can move your stop to break even or wherever it may be. So let's say you get something like this and we move all the way up here, you're up like 30 points. Like if price is logical, that should work. And then you should be able to move your stop to break even. Okay. And I mean tomorrow shouldn't be a horrible price action in my opinion, but like I said, if we see something like this should work. And then you put yourself to break even, whatever. All right. And then that's all where it comes down to, okay, is my final bias right? And you'll notice right away. Okay. But if I see us tomorrow where we just go down, retrace, we're not making any higher lows, we're not making a higher low such as this one and higher highs. And I see us retrace and I just don't see like a long setup. Like let's say we retrace here, we don't even get a fair value gap, whatever it may be, we just get nothing. Okay, that's when you know your bias is kind of wrong, and it's not that it's wrong, it's just that's when you get a backup plan. Okay, my backup plan, if the market has no urge or no motivation to even try to get a long setup tomorrow, I know we're probably gonna dump. And then once that big candle kind of slices through a major fair value gap like this one, that kind of confirms it. And honestly, looking at the lower time frame here, I think this will give us the biggest indication. Not even this. I mean, this is more of a screen time thing, but I mean, this is a pretty big fair value gap. It's an intermediate term low inside of it. This is usually like a soup below, and I feel like if this soup fails and we just knife through this, I think this will be a market maker sell model, and we will go to this red line. So that's my backup plan. Okay, that's only if the market has really no urge to bounce here. So like that's what I'll basically do. I'll kind of create two plans. I'll have my main plan, which is I'm looking for long in here. Okay, I know if this was a 1 minute chart, like I understand we already hit buy side here, and if you look to the left, we already hit buy side. So why would I be looking for longs here? Well, I know we have more buy side above. Why? Because and it's all lower resistance liquidity, right? If I draw a line, like a lot of you probably came from trend lines or whatever. Okay, where does this complete? Well, we complete it at the top of where the trend line started, right? Which is actually up here. Okay, believe it or not. So this is my final target, but do you think that's too much for this week? Yeah, we're not going up 1,000 points this week. So we're in a situation like this where we already hit quote unquote buy side liquidity, right? If this is a 1 minute chart, it'd obviously be risky to long this, but I know on the higher time frame there's still more buy side above, so I would be looking for some sort of bounce in this week, and that's why I'm interested in that. Again, my backup plan is if we violate that 12-hour fair value gap, I know we're going to go down here. But as of right now, still looking for longs in here. I'm creating that condition. The 12-hour fair value gap is my condition. You're probably wondering, like, why isn't the 4-hour my condition here? Well, I mean, if we go below this 4-hour, there's still a chance we go and bounce up this 4-hour. So I don't really like it. Be the 12-hour where everything kind of combines in the one. So everything would have to combine to the one, and you can see this is actually 12-hour BPR. Yeah, it is a trend line, and again, the only thing this trend line should show you is it should visualize the stop losses. So what it means is we have stop losses here, 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 here. Okay, and obviously we should hit the final stop loss, which is here. So it visualizes that, okay, once we break this, we should go hit this, and then it's not complete until we hit this. So even though we may have hit buy side last week, I still think there's a good chance of going up to these. And my guess is this. I think this is where we're at right now is going to be a key pivotal area because we're hitting this 4-hour fair value gap. And I never actually draw these on the left side. I don't really like to draw these because they're from so far away. But this looks pretty clean in my opinion. Okay, there's just those fair value gaps are going to be very clean and not clean. This is definitely a pretty clean fair value gap. So I think if we break over this or close above on the 4-hour, I think we honestly we should rip right to here in like 2 days or even a day. Honestly, I think we could rip here in a day if we close over this on the 4-hour. So like right now, my condition remains between this 12-hour BPR and this 4-hour fair value to the left. So, but like I said, once this 4-hour close over, I think in less than a day we could definitely rip up to here and then here. So again, you can kind of see we're in between two key areas. We're between that 12-hour BPR. We're between the 4-hour bearish fair value gap. So, like I said, I'm gonna be in scalp mode probably. Here, and what do I mean by scalp mode? Okay, like when I'm in scalp mode, that means I'm looking for long. I'll take the long, but I'm not going to hold the full position for 50 billion points. I'll scale a lot at like 20, 30 points, and then I'll hold runners. And being in scalp mode means, am I confident those runners are going to hit? Not really, but I'll try to hold runners for the higher time frame bias that I think is right. But I'm not going to try to hold the full position for like 30 million points because, especially when we're trading between these two fair value gaps, it just makes sense. There's a lot of times in the 1 minute last week that we were between two key fair value gaps, and you see like the targets half hit, and then the final target never hits. Let me see an example. Gotta do. Oh yeah, right here. So on Friday, we were between this bearish fair value gap and this bullish fair value gap. Now, if I go to the 1 minute on Friday, look what happened. Look at the price action between those two fair value gaps. Okay, the weekly is like almost the same thing right now. We're in between a major 4-hour and a major bullish 4-hour. Okay, so I would not be surprised if the week started out like this. However, will this be tradable? Yeah, because it would be on a weekly, it would be on a daily or 4-hour time frame, so it's gonna be much bigger moves. Like this, you can see from here to here is about 30 points, but it would probably be about 50 to 100 points on like a higher time frame if we did get this. So I mean, it would be tradable off the 1 minute, which I probably most of us trade, or even the 5 minute. But yeah, like this is something that I'll be expecting this week, maybe because we're in between those two key areas. And it's still going to be very volatile. Like you're still going to be able to go in the 5 in 1 minute, and you're still going to be able to get really nice moves. It's just what's going to happen is this: you're going to take a long. For example, let's say this is an inversion fair value gap, even though you're going to take a long right here. What's going to happen is you're going to get out for like 50 points here, and then you're going to hold to the final target, which is here, and it's not going to fill, and you're going to stop the break even. So that's going to be kind of the modem in this week. And if I get south to break even, it's whatever, but I feel like there's a good chance, and I think it's a good idea to try to hold longs for like runners this week, especially as long as the market urges and it's trying to staying up. So what do I mean by like the market actually, like how can you be able to tell that the market actually is trying to get long setups? Well, there's been days where if you go to the 1 minute, like let's start here, for example, like the market here, it's not even trying to go down. Like it's not even trying. There's not a hint of short setups whatsoever. Like it's not trying at all. Okay, you can just see we go up, 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 up. And if I see that, but to the opposite side on like the 5 minute or 1 minute going into tomorrow, I know the bias is probably wrong. And I'm gonna actually bring up my ninja chart because I always see this in the 30-second, and this actually tells me when we're about to knife in the 30-second, and which translates to the 5 and 1. if I can find an example. There'll be times where like I'm looking for a short or long in the 30-second, and the 30-second starts closing every fair value gap, and usually that means we're about to dump. So let me see if I can find an example, so you can really translate this to the higher time frame. If I can find an example. See, like all this is fine because the market's giving us both bids and asks here. Like it's trying to go both ways, but there are literally times where we'll just close every fair value gap. So this is a good example of not closing a fair value gap. See how in every retracement here we're getting a bullish fair value gap? Like this is a good sign. Okay, like it's a tick right here, but it still counts. Like it's a really small tick, but it still counts. There's been times where literally we'll go down or up, and the market will just close every single one every single time, and that's when we're about to knife usually. Like this is a good example here. Okay, when the market's here, you can see this candle. It was almost going to be a fair value gap, but then last second we wick up. Okay, and you just see every single red candle. There's no bearish fair value gap whatsoever. Okay, even here, this is a great example. Let's say you're trying to look for a short example here, right? It looks like there's about to be a fair value gap. Nope. Looks like there's maybe about to be a fair value gap. Nope. Looks like there's about to be a fair value gap. Nope. The candle closes it. That's when you see all this. You can't get a fair value gap. The market just keeps pumping up, and then finally start to consolidate around here. You get another bullish fair value gap. We finally get our first fair value gap after how many candles? A ton of candles. But the lack of fair value gaps being created just tells you that you're definitely wrong. That's something I've realized, and like just pump like a ton. Okay, like a ton. And it's just really when these fair value gaps close. So like here's another example right here. You can see this bearish fair value gap. Is this one? No, it didn't. It got closed by a tick. And what happens? Gets closed by a tick. We just keep going up. No fair value gaps here. Not even any single bearish fair value gaps here. And it just tells you when we're about to get that big move. So if I see that tomorrow, like going into tomorrow on the higher time frame, where if I'm on the 15-minute tomorrow or I'm on the 5-minute tomorrow and I literally see like just not even a single bullish fair value gap forming for any confirmation setup whatsoever, I know that I'm probably wrong. So that's going to be my indication. But if I start to see some good bullish fair value gaps put in tomorrow, that's when I'll obviously look for the long. So I think that's going to be the big indication. But yeah, like I said, that's about what there is for that higher time frame. Another thing is a lot of people that wonder like, oh, they'll say like we're at a daily order block, which I totally understand, but I mean technically this daily order block was so long ago where I mean I like the fresh order blocks. I like the order blocks of the same leg. This is like from a whole different curve. Yeah, this is like from a whole different curve, which I mean they can matter at some points. I mean, I feel like the only reason this would matter is because of the 4-hour. But if there's no 4-hour fair value gap here, I would say that this daily wouldn't matter at all. So, I mean, I feel like it's a 4-hour fair value gap that matters here, not the actual daily order block. But, yeah, don't get caught up at the daily order block, especially because it's in like a whole different curve. So, I mean, technically, I wouldn't even consider an order block. But you might see some resistance from it this week just because it's a 4-hour fair value gap. So, and the resistance you see, like what I think it's going to be a resistance for like a pullback resistance, meaning it's not going to be resistance to take us to sell side. It's going to be resistance to do something like this. And again, I'll immediately know if I'm wrong tomorrow. Okay, like we'll probably end up violating this or holding this tomorrow. It's going to tell me right away. So, yeah, I think that's about it for that. Let's see. Euro, if I can go to like the Euro weekly chart, to show you guys like a new chart example. Wait, order bearish until discount free retail. No, I don't read the market in that way. I read the market and conditions. I read the market that okay, we're inside of 4-hour fair value gap here. I'm gonna see how we react. That's how I read the market. I don't read the market as okay, everyone thinks we're breaking out, we're gonna go up. Because if I think that, I'm not gonna long when this is the most obvious long in the world, and I'm gonna miss out the move. So if I think that and it's a double negative, well then how's that gonna help me? So you don't want to try to outthink this. You don't want to try to outthink it or outsmart anyway. You just want to play what you see, because you could say both ways. Oh, retail traders think this is a breakout, they're gonna long this week. But you also got a bunch of other people who are like, oh, war, bearish bonds, whatever, and they're going to try to short this week. So I just play what I see. You can't try to outsmart people, okay, because you're basically just outsmarting yourself at that point. Just play what you see. Watch how we react to fair value gaps. That's really the main thing that gives me the draw on liquidity. Yeah, so Euro, if I go to like the Euro weekly, is it easy to maybe predict the weekly here? No, not at all. Why? Because we're not in any important areas right now. Like, there's no fair value gaps here in this whole leg until this one right here. Okay, and you can see we just took a bunch of lows here. So, like, on the weekly, this is more of a chart where I will not come in with a prediction, which I have not come in with a prediction before in, like, NQ, but I can now because it's a lot more obvious. But, like, on the daily or the weekly, I couldn't really come in with a prediction this week just because of the lack of PD arrays we're inside of. If I had to guess, I actually probably would be leaning long. But what would the condition be? Well, there's no condition here because we're not on any PD arrays. So what I'll do is I go to lower time frame, daily, and indeed there is a condition in the daily. Okay, what's the condition in the daily? It's this daily fair value gap. Okay, so condition for Euro is actually this daily fair value gap. Did the body hold it? You can see, I think the body did hold this. I would count that as a hold because it's not convincing at all. So I would say the body did hold this. So, like, my condition going to Euro USD this week would just be this daily fair value gap. And if we violated this one, well, then we'd probably go to this one down here. Market moves from fair value gap to fair value gap. So if this condition breaks, I don't want this one. If I check the monthly, to check, which if I check the monthly, okay, now we're cooking. Yeah, so this actually does look a lot better. So the monthly, this is actually a monthly fair value gap, and there's an unbalanced fair value gap beneath us. So the monthly definitely does look a little more bearish here. Okay. Yeah, I would say the monthly does look a little more bearish here. The only thing I don't like is, that's actually fine. But yeah, monthly definitely looks a little more bearish here. So because we're in a monthly fair value gap, we go back to the daily. Okay. And now it would make more sense to, okay, we're delivering on a monthly fair value gap. It would actually give me more conviction here to short if this daily fair value gap was broken. So I'm actually going to change my mind here. So instead of going into the mindset of, okay, I'm bullish as long as this holds, I'm going in with a mindset of, okay, I'm bearish, but I can't short till this is broken. So my mindset just totally shifted there because of the monthly there. We're in that monthly fair value gap. So that actually kind of shows how a different fair value gap can shift your thinking, which is good to know. But yeah, because we're in that week or the monthly fair value gap, right? That just shifted my thinking to where, okay, I would have more conviction if we got a short here. Why? Because I know if we broke this, we'd probably accelerate downwards because we're in a monthly fair value gap. However, long here would kind of make me a little scared because we're in a monthly fair value gap to the downside. So you're gonna see both sides of the plays, but you're probably gonna have more conviction to one side, which this is definitely a setup where I'd have more conviction to the downside. Yeah. You ever consider LRL? Or yeah, like the LRLR in the daily right now, like this is definitely very clean LRLR in my like this is just very clean. And how do you know it's clean? Well, it's a algorithmic trend line. Right? A lot of retail traders, they actually short this trend line, but we broke out of it. So where are all their stops going to be? Above the old highs and old lows. Okay, but in this case, they're going to be above the old highs. So especially when an algorithmic, or especially when a trend line looks algorithmic like this, that's like those are the best ones, obviously. And I know you're probably like, oh, he's a retail trader drawing trend lines, but it's just a visual to make you guys understand a little better. So yeah, let me see, and then like let me see gold. So gold is actually in a good spot. So gold on the weekly right now, we're kind of delivering from this fair value gap, which not the cleanest delivery because the body did close above, but there is the giant BPR below. So my weekly analysis on gold would not really be able to be dependent on this fair value gap right here because the weekly candle won't close. But I would actually look at a lower time frame and see if there's any bullish fair value gaps we're holding, and if those broke, we would go where? We'd go to the bullish BPR. Okay. We go to the daily, we indeed do have a bullish fair value gap. So my prediction would be, okay, if this daily fair value gap's closed below, where should we go? We should go to this weekly BPR, which starts at this red line. It would be right here. Okay, so that's kind of my prediction there. And you can see we did put in an order block here. So you could almost maybe anticipate a close below this, in my opinion, because of this order block. But, you can't just short because of that. You have to actually see the confidence. But, like, this is actually another good chart because we really have nice PD arrays on gold. We're inside of a nice PD array in the daily. This is close below. Where should we go? We should go to the next PD array, and the next weekly PD array is this week. Right down here. And DXY, pretty sure is bullish. Try to guess. You can see the daily. The daily did close above this fair value gap, so this definitely does look bullish. Yeah, I know DXY and NQ are inversely correlated, but have we seen NQ and ES go up at the same time? I don't think the DXY is going to affect NQ that much. I think DXY to me is mainly like this will affect gold and euro directly. It does affect the indexes, just not as much. Like I've seen them go the same ways before. Like I've seen DXY pumping, and I don't think. I think NQ could go all the way up here, and DX just consolidates here for the next week. Like that could literally happen. So yeah. But same thing, like on DXY, we inverse this bearish fair value gap. Okay, so that's our PD array, that's our condition. And the next target would be either the next high or low or next fair value gap. Well, the next high is up here, the next fair value gap's right here. Okay, so because of that, the closest target is where? The fair value gap. So the target would have to be the fair value gap first. So yeah. Meadows only. I don't really consider the monthly fair value gap or the 4-hour fair value gaps on Euro unless I have to. I mean, this actually does look pretty good, to be honest. So it goes back to okay, whichever one here breaks will probably be the move. So you got the low of this 4-hour fair value gap down here, and you got a high of a 4-hour fair value gap down here. So there's probably guys who don't even do these weekly outlooks every Sunday, and they probably come in, they draw these two, and they'd be like, okay, whichever one breaks, that's my bias. So that could be you. Okay, you could go in tomorrow, not even trade, just wait for one of these to be closed above or below, and that's your bias right there. There's your bias. I just gave it to you for free. That's a good way to do it as well. So this is actually kind of two key spots: this right here and this right there. Whatever the body closes above or below, as long as it's like it's enclosed, that's your bias. There's obviously other ways which I'm trying to do in the higher time frame to predict and anticipate a bias, but if you want a really solid bias, you just wait till one of the is violated, pretty much. All right, so that's that. For that. So I showed you how I looked at gold, Euro USD, and Q. Okay, showed you how I draw my fair value gaps, what to do kind of there. Does anyone have any questions? Yeah, what's up? Yeah, I always look at premium discount. Oh, premium or discount for it doesn't matter to me. The reason why I'm looking at premium or discount doesn't matter to me is because look, this right here. If we inverse this, right, it's not like I want to call this a premium or discount. Inversing this tells me what we're gonna get here. Okay, and then this right here. Inversing this tells me we're probably gonna get down here. Okay, and then inversing this, probably a higher time frame for that gap, is gonna tell me what? Well, we're gonna get down here. Okay, so it doesn't really matter where premium discount is for this, and using inverses, obviously, like, I know if this is broken, we're going to get at least here. I know if this is broken, we're going to get at least here. I know if this is broken, we're going to get at least here. So that's kind of the ideology behind it. And it's not really, you don't really have to use discount for that. Yeah, I would say higher time frame definitely makes, like, the higher time frame, it would make sense if we went in the discount. So if we draw a discount the premium in the hourly time frame, okay, let me just follow these. So in the hourly time frame, like, if you're a higher time frame trader, I mean, it would make sense for us to go here into this 0.5 level. And yeah, this is actually a pretty clean discount. So, yeah. All right. Well, I think that's gonna be it for tonight. I did a backtesting session last night, so make sure you guys watch that. I drop a lot of gems in the video, even though it's long and boring. But I mean, they're gonna get better. So, no, I'm not tired at all. I literally nap, but yeah, I'm not tired at all. But yeah, that is it for now. I'm probably not gonna do a free live stream this week, but I will do one next week. So stay tuned. Yeah, I'll see you guys later. Peace.